Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dan Reeser, Chief Growth Officer at Acala, a decentralized finance network powering the aUSD ecosystem, to discuss why over-collateralized stablecoins like DAI and aUSD are surviving the storm. Dan, it's great to have you with us. Welcome to Trade Talks.
Hey, thanks for having me.
You got it. And give us some background on Acala and what makes your ecosystem unique.
Yeah, Acala is a decentralized finance platform built on Polkadot. We're really focused around our kind of core product, which is aUSD, like you mentioned, our stablecoin. And then we've built kind of a blockchain around that. So a decentralized exchange as well as a liquid staking product to kind of support that stablecoin. And then on top of the chain, what's called an EVM, or an Ethereum virtual machine, allowing any Ethereum compatible application to launch on Acala. So most of those are kind of DeFi focused applications, but kind of a wide variety launching pretty soon.
Let's learn more about Polkadot here. Now, you say it's a layer 0 blockchain, which is below layer, what you think of as layer 1. Explain to us what the distinction is and what the benefits are of Polkadot.
Yeah, so a layer 1 blockchain is kind of an individual, traditionally isolated blockchain. This can be kind of like Ethereum, Solana, all these layer 1s that have all these applications built on top. Gavin Wood was actually the person, he was the original co-founder and CTO of Ethereum, and kind of realized back in around 2016 that Ethereum was going to have trouble kind of scaling and handling the amount of transactions coming to the network. So he actually left and created the Web3 Foundation and a company called Parity Technologies to build a new platform called Polkadot. So we refer to Polkadot as a layer 0 because it's kind of one layer below layer 1, connecting up to 100 layer 1 blockchains together. So Polkadot's main focus is doing really two things. So number one, securing blockchains. So it provides security to all 100 blockchains that will be connected to Polkadot. Today it's around 15. And then what it also does is interoperability, or connecting all these blockchains together so that blockchains like Acala can focus on one thing like DeFi, others can focus on, let's say, privacy or Internet of Things, but then all of these blockchains can kind of seamlessly work together.
You know, it's interesting, Dan, every time we have on folks such as yourself, I always hear about the word interoperability. That really is the key for making these technologies and developing Web3 and Metaverse successful. Do you think Polkadot will have the ability to have more than 100 blockchains able to operate together at some point in the future?
Yeah, definitely. That's what they've already been talking about with Polkadot 2.0. That's definitely more in the future. Right now, we're still in the initial phase. Polkadot just completed kind of its full launch. It's been about 5 years coming, but this cross-chain technology just launched about 2 months ago.
Right.
So now there's about 10, 15 blockchains launched. It'll scale up to 100. But then in the future, it's kind of a little bit mind-blowing, but where Polkadot's headed is that every individual kind of slot that we plug blockchains into now can actually become another multi-chain kind of ecosystem. So what Polkadot is now, like the 100 chains, will be 100 slots for 100 other of these relay chains, as we call them, to connect in. So it'll scale up into the thousands, probably in the next 5+ years.
It's so remarkable, Dan. I mean, the ideas and the innovation are there, but it does, to your point, it does take time to build these effectively and securely. And 5 years is really not that far out when you think about it in the grand scheme of how long this technology has been around. Let's talk about a few recent partnerships, one being Alluvial, which is going to provide a first of its kind institutional liquid staking. Tell us more about that.
Yeah, definitely really excited to work with Alluvial. So this is a liquid staking standard. So I think it would take a little bit more time to get into liquid staking, but ultimately lets people stake assets like DOT and earn interest, but also receive kind of this liquid token that allows them to continue to participate in other areas of DeFi. Alluvial is a liquid staking standard that's going for enterprises. So working with teams like Coinbase Cloud and Figment, Acala being the one to provide the technology for DOT staking. Alluvial is also supporting Ethereum and other blockchains in the future. But what we're doing is creating almost another instance of our staking platform to allow, one, what's live today, which is open kind of permissionless staking for anyone in the world. And then number two now is a KYC, or know your customer, protected environment for people who need to know exactly who else is participating in that liquid staking environment. So what we'll be able to do is provide the staking product to fintechs, banks, exchanges, institutions who need that compliance. And then the exciting part is all these fintechs and banks, it's not only just them using it, it's their millions of customers kind of leveraging their platform, whether that's an existing app or website that they're using today. So making it super easy for people to use, not having to interact with some of the complexities that come with crypto, like public and private keys and MetaMask and things like this. So yeah, we're really excited to roll this out in the near future.
So Dan, just to wrap up here, let's revisit stablecoins for a minute. They have been in the news and not for the best news. I mean, think about staking as we try to understand what that's going to look like as we move forward. How do you feel about have we passed the volatility when it comes to that? Do you think these systemic issues are removed from the digital asset space, or could there potentially be more pain as the asset class continues to build? Because, you know, the news has not been that encouraging around those two spaces.
Yeah, so for stablecoins, we're working on an over-collateralized stablecoin. So you mentioned earlier DAI in the Ethereum space and aUSD for us. This was actually a situation that kind of renewed our confidence in our choice in building an over-collateralized stablecoin. What we learned from this kind of previous event with an algorithmic stablecoin is that those are really purely kind of experimental. They grow extremely fast during a good market, but then what we found is that in a down market, it wasn't able to survive. So now over-collateralized stablecoins kind of in the non-fiat backed space are kind of coming out as one of the winners of this based on these recent events. And then USDC and USDT being dollar backed or fiat backed are also still one of the most kind of trusted and stable versions of these stable coins. Aside from that, there's still a lot of kind of credit risk unwinding with the Celsiuses and three arrows of the world. That is a little bit unrelated to us, but still kind of impacting the broader industry. So this seems to be, we're almost past this, it seems, but we're still kind of working through letting the dust settle around all of that.
All right, Dan, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.